Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming your way with the market recap for Friday, the 26th of October. Of course, the week kind of ended like it began, kind of with a bit of a thud, right? As not able to really establish any new bullish momentum as we limp into the weekend in the overall market. We're still right in the middle of earnings. Certainly, Google and Amazon kind of disappointing here in the after hours market last night after reporting. Didn't do the market any services. Did fight back though. So it certainly could have been maybe worse. So maybe that is a sign that there might be some life in this thing just yet. Looking ahead to next week, we still have some big names coming out with earnings. Obviously, Apple, Berkshire Hathaway, we've got Facebook, Alibaba, ExxonMobil, Pfizer, MasterCard, Chevron, Coca-Cola. So we still have plenty of earnings before we're done with this thing. So we'll be sure to keep an eye on those together as we move into next week. As we kind of take a look over at our broad indexes, we gap down on the open, probably in part to negative reception from Google's and Amazon's, and of course maybe some other earnings. Really volatile day as we've come to know and love in the market these days. Really battle back and forth, very big range as pretty normal. But as we look here at the S&P 500, really not a whole lot to see here. It did break that previous swing low that we established on Wednesday, sold off pretty heavily for a bit after that, only to rally up and close back above that. I really don't think much has changed from a technical point of view right now. Still pretty extended to the downside, broadly speaking. Still volatile and still on the give me an excuse and I will sell side. No doubt about it. The NASDAQ, I think, held up a little bit better here today. As you can kind of see, very just in a little tiny bit broke that low from Wednesday, but actually fought back pretty well. All of our indexes did sell off quite a bit from the highs, but they also rallied up a fair amount from the lows. So, again, all we can really probably take out of this, because it didn't really change our charts, in my opinion, at least, in the indexes, is there's still some fight in this market. We are extended to the downside. We are very oversold. Of course, it's Friday, so what a day to cover, right? Some shorts from the week. So we'll have to see how we play out next week. But here we're looking at Dow Jones, and really same song and dance over here, back and forth, fighting back, but still closing, in the negative. And lastly, over on the Russell, here we are testing that breakdown or that previous support level that we've kind of been eyeballing lately. That's kind of where it's found its footing here today. Pretty up off of those lows, certainly. But yeah, I would say this chart's got a ways to go before I'll have any sort of a bullish view on it personally. Again, we're very extended from a broad point of view. I don't think it's unreasonable for us to be thinking about looking for bearish retracements in the week to come. That can be, hey, let's watch for some of these things to rally up and then look to short them. That can also be, let's look to find some strong things and look to trade into that. Obviously, I'm going to be very picky about that stuff if I'm buying anything. And I'm not saying I've got a ton of orders in on Monday morning by any means, but with us being so extended to the downside, we are starting to see a little bit of slowing momentum, broadly speaking. Again, it's going to take more than this to get me bullish, and it breaks some more support. And well, it's been extended for a while. It can become more extended, right? But I do think it's probably reasonable as we look ahead to next week to be looking for some things. If we do get that relief rally after this extended move to the downside, we are seeing some fighting to maybe give us at least a little reason to believe it could happen. I think it's probably worth our time as we prepare for next week. As we kind of shift gears over into the materials sector, it won't be one of those things. I know it's really overextended, but it won't be one of those areas that I will be too excited about. Of course, we've not even been able to break back above that previous support level, which of course as we've looked at it before, is a fairly substantial area, right? Within this sector, we go way back. You can kind of see how important this price point has been. It's very extended. I would not be interested in buying. It's got a ways to go to get me on that, but I'll watch it. I don't really see this being the best sector right now from a trading point of view. Obviously, well, no doubt it's not a very good, strong sector overall. It doesn't take a trader to recognize that. But watch that price point. That has been a very important price area on this ETF for quite some time. So as long as that holds, and I would expect it to be very difficult to break through that, I will continue to maintain a bearish posture over there. Energy is interesting. Dojing at that support level that we've been kind of keeping an eye on. Now we've seen 2 days. It's been volatile, but so is the market. It's been back and forth. But putting up a fight at support, I would understand the bullish argument. And obviously I say this from a very short-term perspective. I don't think that this is the bottom on anything, but I do see us fighting at support. If we're starting to get some signals as we move into next week, I wouldn't be surprised for that rally to come into the energy sector. We laugh and kind of mock the material sector for being very extended to the downside. They just started it earlier. The energy sector at this point is very extended as well, right? And most of that's happened in the last couple of weeks. So this support level holding, I do think, is at the very least a place where we stop being bearish for the short term, wait for a rally, wait for a breakdown. And if we are potentially bullish in this area, this support level holding probably is important to us if we are on the bullish side of things. Not terribly different with the financial sector. It's testing an old breakout point. This has been an important price point before. That really is, it's important to me that holds, but it has been holding. We've seen a lot of back and forth, but really that's been the line in the sand for the financial sector right now. Again, you can kind of see a pretty common theme with a lot of these things. Things are at support and very overextended, or both. It's time for some sort of a relief rally, right? And that might be all that it is, and that's all I would expect it to be whenever it happens. And it will eventually happen, maybe not next week. I'm expecting to, I think that that's what will happen personally, but we'll have to get some signals before we move on that. But, we're still, we've got a ton of overhead, everything we look at. So it's not going to be an easy fight back up, no doubt about it. Industrials, much like the material sector, we look at energy, we look at financials, and at least there's a bullish case. It might be fairly weak, but those are some pretty important price points on the energy sector, on the financial sector. Then we look into the materials and the industrials, and they're on the wrong end of these important price points. And so much like the materials sector, the industrials are going to have to get back on board, get back above that before I'm even open to it. So this is probably not an area that's going to be all that interesting from a bullish point of view. Hey, retrace, and I'm not going to be terribly shocked if it retraces through that, but that isn't going to be enough to get me on board. Technology showed some resilience today, no doubt, as we saw on the NASDAQ. Again, it was not pretty, but it was resilient. So really have not really changed from where we have been. Continue to watch that 67 area. That is kind of that new support level. And we've seen time and time again, and oftentimes it's very short term. We saw it on several areas today. Those are short term levels of support or resistance, but we're seeing it a lot where those short term levels get broken. You see a nice little burst on the intraday, and then it typically rallies the other direction before the day is done. But holding some support, at least, it's something, right? It is something. Staples sideways. I really think you just treat that this way. I did not take part of, unfortunately, the nice run on the Staples sector. And now that we're back within this range, I am kind of treating it like we were before it broke down a few weeks back as kind of a neutral type of sector. It is defensive, and so some people are looking into it, but that doesn't make it immune to selling, as we see here today. It was a good day for defensive stocks in theory, but the Staples sector as a whole didn't show a heck of a lot of strength. One of our weaker looking, just looking at 1 day candles, one of our weaker areas today. So I'm going to continue to treat it as if it is sideways, maybe with a very, 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 very slight bullish bias, but not enough to act on, I don't think. I would be okay with trading individual stocks within that sector from a bullish point of view. but I would, of course, be very picky with that. Utilities, man, they failed that break. They didn't even get to try it out, try to test that breakout point yesterday with the gap down. And boy, it got ugly over in the utility sector here today. Very, very steep selling. About the only thing, as I was kind of looking at it, I don't see myself wanting anything to do with utilities on Monday morning. But one thing that did kind of, jump out is kind of this little, very short term, but it is kind of a trend line. It's not perfect or anything like that, but we have that area. But for me, again, right now, that's a pretty tight range. As a potential buyer, there is room from where we are today back to that resistance, which is still resistance, right? We tried, we just failed, at least last time around. There's not a lot of room between where we are and where that is, especially if we see any movement, which we'd have to see for me to get confirmation to maybe want to take a shot at that. I think that this is watch for the breakout. If this shows more downward movement, though, I do think that would be a fairly reasonable sell signal if we build off of this selling, on Monday morning. So, or Monday, I guess Monday overall, not just the morning. So I think this is kind of a keep an eye on sector personally. Healthcare, interesting placement for this sector. Of course, we bounced, bought at the 200 yesterday. We did it again here today. To me, and again, just speaking for myself, if we get the signs of that rally, that whether you want to call it a relief rally, a snapback rally, whatever you want to call it, this will certainly be an area that I find appealing, holding its 200 in a bubble, in just a bubble where there's no news. I don't know what's going on in the market. I don't care what's going on in the market. If you just showed me this chart and it was a random stock on a random day in the market, I would be very interested, not necessarily to jump in sight unseen on Monday morning, but I'd be very interested in the placement. We're at the 200-day moving average. This is kind of sitting at an old breakout point that we kind of watched at about when we started doing the market recap together. I think is about the time when it broke through that resistance. The price is appealing to me. I will not lie. Unfortunately, I don't live in a bubble. I have to work within the market that we're currently in, just like everybody else. But I can see myself being interested within this sector for short-term bullish trades next week if, again, we start to get that relief rally holding up at the 200. That always is important to me. It's not necessarily enough to make me want to just run out and buy, but it's always important. To me, that matters. Not going to have that debate with the discretionary sector, though, as it continues to struggle. Again, much like the overall market, back and forth, but continues to be a fairly ugly and fairly weak sector, in my opinion. This is the type of sector I'll be happy for some bearish retracements, but I can't imagine jumping in some short-term bullish trades from a sector perspective with this type of a chart. And real estate did just enough on either Wednesday or Thursday to hit bears stop losses. Of course, we had that ran into the 200 early in the week, had a nice bearish engulfing candle, and then some downward movement before turning positive here the other day. Had the failed breakout, on Wednesday, and then the clean breakout on Thursday. So just enough to hit people's stop losses on their bearish trades, I imagine. I don't know anybody like that. Wink, wink. But and then we see that downward movement. I still, think that this is overall in a bearish spot. But honestly, I'm going to watch it. I'm not really, there's some conflicting signals in it to me. We still haven't made a lower low, so we are still making higher highs and higher lows. Just because today, went down, that hasn't changed. That's a bearish candle. This could easily be considered, potentially at least a bearish pivot. I think this is going to be one that I'm just going to watch develop next week. Something very well may pop up if we work into, Tuesday, Wednesday, Thursday. I don't have a good handle, though. I'll be the first to admit it. When I don't have a good handle on something, I look to other things. So, certainly no shame in admitting that. I'd rather admit that I'm having an issue for whatever reason than to lose money. And then, of course, looking over at the communication services sector, very much like the market, very volatile day. Of course, we had Google and Amazon and Netflix, and so we've got some crazy guys in there. We're at support, pretty close to a low point, though, right? Yeah, this isn't going to be one of those areas that I'm chasing after one way or another. I do expect from a broad perspective that we are due for retracement. I know a lot of traders I've talked to over the last couple of days feel the same way. It doesn't mean we're thinking that we're turning around and getting back on track necessarily, but I think just all of us, we look at how extended we are to the downside and realize, wow, I guess theoretically that can continue, but practically speaking, we can't continue to fall that much without this thing getting real ugly, real fast, right? So we'll keep an eye on it together as we work into next week. As we kind of shift over into the dollar, got very, very close to that 97. I think it got to 96.86. Yeah, that was the high today. Got very, very close to that resistance level. That's where the profit taking came in. No terribly huge surprise, especially on a Friday, kind of pushing us down toward, back into halfway, I guess, down into that breakout point. So I think what we do is look at this as, hey, of course, it makes perfect sense that we struggled at resistance, that we sold off resistance, especially on a Friday. Great time to take the trade off and go have a nice weekend. I think if we can pull back to that 96, that can be a very appealing area. I also think if we can break that 97, that could be a potential bull zone. I don't know which way or if either of those things it will do, but I always like to kind of visualize these things in my head. If this pulls back, if we get a candle down on Monday into a doji on Tuesday, then I see some upward movement on Wednesday, that would be something I'd be interested in. Maybe we push up Monday and Tuesday into and through that 97 for a breakout. That could be something I'd be interested in. So I always like to kind of imagine, if you will, what I think I would like to see and then hope I see it, right? But I think as long as we hold that 96, we can keep an overall bullish posture on the dollar. Personally, at least that will be my take on it going into next, as we start next week. Over in the metals market, we continue to have the strangest, one of the strangest breakouts in recent memories in the metals market, particularly with gold. After breaking out, everybody thought that was a bullish signal. I think everybody was right, at least so far. They've been proven to be right, but it is just a slow drift to the upside. There's never really been that crystal clear, strong, candle or that nice, clean 3-day pullback to the breakdown or breakout point. It's just kind of one of those, I call them worm burners. That's what I always called my own golfing game because I'm not very good at golf. And it's just kind of drifting up, and so I guess, we're not terribly surprised. We've had the bullish outlook on it together ever since that breakout point. So not the strangest thing ever. Just find it interesting how it's just crept. There's never really even been that day when you thought, yeah, today is the day. I would have felt that way sometime over the last couple of weeks. And well, just not seen anything to say that today is the day that it takes off. But as long as we continue to hold that breakout point, I'm comfortable with it from a bullish perspective. Personally, my opinion has not changed. Same with silver. Silver makes a little more sense because, while I don't really think there's a strong overhead on gold necessarily, I do think people are looking at 15 as a pretty strong overhead on silver. So it makes a little sense that it's taken some time to get there, but continues to hold up, continues to trade back and forth, much like gold. Really, again, probably haven't changed your opinion on silver for 2 weeks now, since we originally broke and closed above the 50-day moving average for the first time. Again, I'm going to think that the right play is to wait for the 15 break. But as I've said before, anybody who's buying silver on Monday, who bought silver today or earlier this week, I wouldn't want to be on the other side of their trade. I would certainly be on that side with them. Looking at natural gas, continues to be pretty volatile on the day-to-day basis, kind of working back down to the bottom of this trading range today before rallying up a pretty strong rally coming off of those lows here today. Still think overall you're looking at this as a sideways until we get a clean break one way or the other. And I'm not going to be ready to say that I would do this on Monday. We can kind of see how it opens and how it behaves on Sunday. But we can kind of watch this about halfway point where we kind of have this swing that we put in earlier in the week. I do think that can be a little bit of intraday resistance for us. And so a break above that could be what I would interpret that as at least a small buy signal. I don't know. Today, I wouldn't think it was a clean enough to buy. I do maintain that the best way to play with natural gas right now is to let it go sideways, do some cash flow things, sell some some naked puts, do some credit spreads on UNG or something like that, I could understand that. But directionally, it can get crazy in between there. While that's not a huge movement, it can feel that way over in the commodities market sometimes, right? So I think we continue to overall look at this from a neutral and a shorter term standpoint and wait for it to break one way or another. I think that would be a much better signal and much easier to work with than playing off of the bottom. But again, the bottom to the top, when we're sideways, I completely understand people who are taking trades, at the top or bottom, because your risk to reward is fantastic. The folks who were jumping in on natural gas towards that low today, it was maybe risky in quotation marks because they didn't have a lot of signals that it was turning around. But if you're managing it from the perspective of, well, I buy it here, if it breaks, an ATR, half an ATR, quarter of an ATR, 10% of an ATR, whatever your personal rule is, below this support level, I'll get out, take a small loss. If this support level holds, which fair reason to think it's going to try to, then I have a fair amount of upside in the trade. So I will always understand folks who trade directionally within these sideways, shorter term sideways ranges. It's really not my personal favorite thing to do. I'd much rather, sell credit spreads, out of the money and give myself some room there. But I do get it. The risk to reward is always good. And risk to reward is, of course, a very important concept when it comes to trading. As we lastly look at crude, it showed a little bit of life today, closing above the 200-day moving average, showing some upward movement off of those lows that we've kind of been testing over the last couple of days. If you look at it from an hourly perspective, it looks like we have a little bit of a bullish breakout on the hourly chart, although I think you could argue we're either right there or just above it. I think, you could look at this a couple of ways. Upward movement on Monday, a little bit of a confirmation from a buy side. I don't know. I'm going to have to see how it plays on Sunday before I make any real decisions from that point of view. I do know it needs to be above the 200 for me from a buying perspective. You could also just look at this. We're struggling. This is, again, crude oil probably wasn't going to free fall either. Let's let it rally up, look for some signals, look for some selling opportunities. I don't know a lot of traders who are gung-ho about this buy signal, and I would call it a little bit of one, third day of upward movement, closing above the 200-day moving average, very, very slight, but I would argue a breakout on the intraday hourly chart. It's something. I don't think it's enough for me, but it is something. And at least now I know kind of how to play it. If I do play that, I can either look at it from, hey, I'll just set a stop loss down here, below this low point. If that breaks, well, clearly I was wrong. This was just a relief rally or bearish rally, retracement, and I'll get out of the trade. I can even be wimpier and kind of go in and look at that, intraday floor on the hourly, see if there's something I could work there. There's always things that we can do. And of course, just because I'm kind of a wimp, and I'll be the first to admit, I'm a picky and a wimpy trader. And so I'll be the first to admit that. I do, of course, appreciate when I see some signals one way or the other. So looking ahead to next week, it's probably best for us to expect that we're going to have another round of volatility as we continue to work through earnings. But I do think we can kind of start. And again, I don't think anybody should be running off and going crazy on Monday morning. I wouldn't be doing that. But I do think it's about time to kind of start looking for things if they're there. And it would be perfectly fine in my mind if hey, let this rally go up completely without me whenever it happens, whether it's next week or not. It will eventually happen, and I'm not trusting it. I'm not touching it. I'd completely get that, and I wouldn't fault anybody for feeling that way. But if we can find some things that have held up well, that are breaking resistance levels on things like that, that we can work into that rally if and when it happens, I do think it's about time to kind of start looking for those opportunities if we're open to them, because, well, it is going to happen. Maybe it's just a one-day thing, and maybe it's not for 2 more weeks. But of course, you don't just free fall, just like you just don't go straight up, right? It does seem like we're seeing a little bit of slowing momentum in the market from a selling perspective. And while we got a ways to go before we can say this is the bottom or we're done or whatever, I do think we're starting to see at least a couple of signs that it's time for a little bit of a relief rally. So we will, of course, follow that together here next week. But ladies and gentlemen, that will do the market recap for the day and for the week. Certainly, as always, it is my pleasure, and I do appreciate everybody's time. Be sure to subscribe to the YouTube channel and hit the notification bell if you haven't already, and follow us over at Tackle Trading on Twitter to keep up with some of the things that we're following. Some interesting stocks testing and holding their 200-day moving averages over there. If you don't use Twitter, go check it out. If you enjoyed the market recap, it is always helpful and appreciated if you do give it a thumbs up to let us know that we're on the right track over here. And with that, be sure to double check that earnings calendar. Be sure to spend time with your friends and family doing things you love this weekend. Be sure to go through the stock, option, commodity, Forex reports, the market scoreboard, your watch list. Get ready for next week, whatever that means for you. Make some time each weekend for it, right? But of course, always make time to do things you love with the people that you love as well. With that, ladies and gentlemen, get out of here. Happy trading, and I will see you all in the next one.